Hey everyone, welcome back to Corporate Decoder, the place where we unpack the confusing world of corporate finance. And I've got another exciting SEC filing for you today. This time we're diving deep into Teledyne Technologies Incorporated's latest quarterly report. And let me tell you, it's packed with some interesting numbers. Think of it as a peek behind the curtain of a company that's quite literally shaping how we see the world and so much more. So Teledyne is a big player in some pretty advanced technology markets. They're all about digital imaging, instrumentation for things like monitoring the environment and oceans, aerospace and defense electronics, and engineered systems for defense, space and energy. Essentially, if it's high-tech and needs to perform reliably, Teledyne is likely involved. Scroll cadence deconsolidated statements of income. Now let's get straight to the numbers. In the second quarter of 2025, Teledyne brought in $1,513 million in net sales. That's a solid increase of 10.2% compared to the same period last year. And for the first 6 months of the year, they raked in $2,000 million in net sales. That's a solid increase of 10 point to previous year. This growth is happening across the board, which is a great sign for the company. Scroll operating income, lost Bexus, scroll TIV. This top line growth is translating nicely to the bottom line too. Operating income, which is basically the profit from their core business operations, hit $278.2 million in the second quarter, up 12.6% from last year. And for the first half of the year, it's up 11.7% to $15 million. This shows they're managing their costs pretty well while growing sales. Scroll net income loss attributable to Teledyne scroll. And the real prize, net income attributable to Teledyne, that's the money left over for the shareholders, showed a healthy 16.5% jump in the second quarter to $29.9 million. For the first 6 months, it's up 11.1% to $398.5 million. It's great to see these numbers climbing steadily. Scroll digital imaging field. Let's break that down by segment. The digital imaging segment, which is a pretty big chunk of their business, saw net sales increase by 4.3% in the second quarter. They're seeing strength in areas like unmanned air systems and commercial infrared imaging. Scroll the instrumentation segment is also doing well, with sales up 10.2% in the second quarter, thanks to strong performance in marine instrumentation, which is benefiting from healthier offshore energy and defense markets. Scroll aerospace and defense electronics order. But where we see some truly explosive growth is in aerospace and defense electronics. Sales here shot up a massive 36.2% in the second quarter. This segment is really benefiting from new acquisitions and strong demand in defense electronics. It looks like some of those recent acquisitions are really paying off here. Scroll engineered system segment saw a more modest 3.3% sales increase in the second quarter, but operating income for this segment jumped a very impressive 61.3%. It seems like they're doing a lot with a little in this area, really boosting their profitability. Scroll acquired intangible asset amortization, scroll 2. Now, a quick note on acquired intangible asset amortization. This is basically the cost of the patents and customer lists they acquire when they buy other companies spread out over time. It went up due to those 2025 acquisitions showing up in the numbers. It's a normal cost of doing business when you're growing through acquisition like Teledyne is. Scroll balance at December 29, 2024 scroll. Looking at the balance sheet, Teledyne has $2,922 million in current assets as of June 29, 2025. That's pretty stable compared to the end of last year. Global Shorthy goodwill, which represents the premium they paid for acquisitions over the fair value of the identifiable net assets, is substantial. It grew significantly this quarter, reaching $8,675.8 million. This highlights their aggressive acquisition strategy, especially with that big purchase of the optical systems and advanced electronic systems businesses. Scroll accounts payable for all the liability side. Accounts payable are at $450 million and accrued liabilities are $857.8 million. These are pretty standard for a company of this size. Kroll common stock, $0.10 par value. Issued shares, 47,400 and 24,847. So $10,376.9 million. This is a good chunk of equity showing a solid financial foundation. Scroll cash and cash equivalents beginning of previous row. Now let's talk about cash. For the first 6 months of 2020-25, their cash generated from operating activities was $469.2 million last year, and they say it's mainly due to higher income tax payments and the timing of collecting money from customers. Scroll purchases of businesses, net of cash acquires role. This is where things get really interesting. Teledyne spent a hefty 75-75 chamber D75 and a big jump from $123.6 million last year. This clearly shows their commitment to growing through buying other companies, and you can see the impact of those new businesses in their segment results, especially that huge growth in aerospace and defense electronics. Proceeds from payments on fixed rate senior notes roll. In terms of financing, they made some significant payments on their senior notes, paying down $30 million this period and a large $450 million last year. This is good debt management. Scroll met cash provided by used in financing activities used up $4.8 million. In the first half of 2025, a big change from using 633 payment. Scroll foreign currency translation sues. They also have to deal with currency fluctuations, as you can see in the foreign currency translation line in their other comprehensive income. For the second quarter of 2025, it actually boosted their other comprehensive income by $24.4 million, a huge positive swing from a loss last year. This means the strengthening dollar relative to other currencies worked in their favor for consolidating foreign earnings. Scroll designated hedging activity for Teledyne is actively managing its exposure to currency and interest rate risks using financial instruments. They're using things like foreign currency forward contracts and cross-currency swaps to protect their earnings from unpredictable market moves, which is smart business. Scroll for spare, value asset erostea, their derivative assets, which are financial instruments used for hedging, are valued at $18.3 million. These are mostly foreign currency forward contracts and cross-currency swaps. Scroll balance at June 29, 2025 scroll. Teledyne seems to be in a pretty good spot. Sales are growing, profits are up, and they're strategically acquiring companies to boost their market presence. The increase in goodwill reflects this expansion. Scroll net sales roll, the consistent growth across most segments, particularly the standout performance in aerospace and defense electronics, shows Teledyne is capitalizing on strong market demand in those areas. Scroll legal matters, some legal matters and trade compliance issues with government agencies. While they state they don't expect these to materially impact the company, it is something to keep an eye on. For instance, they're dealing with investigations into an ejection seat sequencer program. Scroll trade compliance matters. They've also made voluntary disclosures regarding potential export law violations. While they are accruing for potential losses, the outcome of these matters could be significant, potentially leading to substantial fines or loss of export privileges. So, while they're confident, these are definitely risks to monitor. Scroll safe harbor cautionary statement. Regarding forward-looking information scroll. Teledyne acknowledges that many factors can affect their future results. They mention everything from tariffs and foreign currency exchange risks to government spending changes and even artificial intelligence. It's clear they're aware of the complex global landscape they operate in. Scroll our opinion on Teledyne, sure. So, what's the verdict on Teledyne? They're a company that's aggressively pursuing growth through acquisitions and innovation. The numbers show they're executing well, particularly in their aerospace and defense electronics segment. The strong growth in that area, coupled with solid performance elsewhere, paints a positive picture. However, their significant goodwill balance from acquisitions means that future integration success and the continued demand in those acquired markets are crucial. The potential legal and compliance issues are also a point of caution, though the company seems confident in their resolution. Overall, Teledyne appears to be a solid, forward-thinking company navigating a complex and dynamic market effectively. That's our deep dive into Teledyne's latest report. What do you think about their aggressive acquisition strategy and the growth in their defense segment? Let me know your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more corporate deep dives. And don't forget to join our Discord community linked in the description for more discussions and to connect with fellow corporate curious minds. Thanks for watching, and we'll see you in the next one.